Title insurance, what is it anyway? So, Investopedia says that title insurance is a form of indemnity insurance that protects lenders and buyers from financial loss of defects in title. What does that mean anyway? Well, translation is these certain defects in title that are the most common are improper wills, the chain of title for a property from, someone being deceased and then it leaves it to different heirs. A break in the chain of title where you've got people that get married and unmarried and divorced and, different marriage situations. Back taxes, liens or judgments on the property, IRS filings, delinquent property tax, also delinquent or missed homeowners association dues or taxes. So these are the types of things that when there's title insurance on the property at the time of purchase, the title company that's involved, no matter what state you're in, some states it's called a title company, some states it's called an escrow company, they will do a search in the public property records where all of these things would be filed, and they do an analysis of the property and all of the different entities that might have access or liens on the property. And in that case, they're giving the new buyer clean and free unencumbered title. Now there's two types of title insurance. One is the owner's title policy, and that is the owner passing to the buyer this clear unencumbered title. As we mentioned before, free of any liens, any heirship inconsistencies, any judgments, etc., etc. It also certifies that all taxes have been paid, etc., at the time of closing. So if there was a claim later on and something popped up after you buy the property, the title insurance company actually would cure it. They would pay for it and settle it because they gave clear title at the time of closing. The second type of title insurance is a lender's title policy. So this one is only required if you're obtaining a loan at the time of closing. Now, any lender that you do business with is definitely going to mandate that you get a lender's title policy in conjunction with an owner's policy. They both go hand in hand when you're getting a loan. We won't let you get one without the other. And what this lending insurance does is it makes sure that it assures the lender that there's free unencumbered title as well. There's some additional checks and balances that the title company must do, that the property is free and clear of any additional liens on the property, and also the taxes are paid and all of those things that happen in the owner's title policy. So this is what title insurance is. Depending on the state that you live, sometimes there's an opportunity to negotiate that the seller pays for the title policy. So I live in Texas. This is a common practice. It is a negotiable item. It is not mandatory that the seller pay. If the buyer is obtaining a loan, it's a buyer closing cost. The lending title policy is the buyer closing cost, but it is a negotiable item on a Texas contract. So depending on the state you live in, just talk to your local realtor and local lender, find out what's applicable to you. But this is the explanation of what title is. I'd love to hear your questions. Comment below, like, share, and subscribe. Good luck with your house purchase. If you're in Texas, call me. Talk to you soon.